Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video. Good morning, guys. Welcome back to another live stream. Happy Monday to you. Hope you're doing well. I have to just tell you that I have been ecstatic recently in the last 24 hours or so. The videos that I've been posting for years have always done pretty well. Like I've always gotten a good bit of traction, but in the last 48 hours, my social medias have exploded, and I've been posting on social media since 2018. So it's, you know, I've had good growth periods and then slower periods, etc. But in the last 3 weeks, it has really been game changer. And I'm just excited about it. So I appreciate every single person that watches my content. Thank you for being here. I do genuinely hope that my content in some way can assist you in improving in your trading. I always say in my videos that I don't claim to be any sort of teacher to other people or mentor. I don't have students of any degree. I'm just not that person. I think those people are great, the people that can teach and mentor people on a closer basis. My goal, though, with my content is to just do the thing that I like to do, which is trading and talking about it and sharing content. And I make these presentation style videos. And when I initially did them in 2018, it was for self-journaling, making videos about what I was interested in. And it started as just a hobby. So it's just cool to be doing this, 8 years later. I did this in college for fun. And here we are now. So life is crazy like that. But thank you for being here. Hope you guys are doing well. Let's take a look at some markets here today. So I am looking at gold here, which is showing a little bit of respect to the level we've been watching at, this 4,200 level. And I will say the one thing that really challenges me to an extent, not actually because I have a lot of fun with it, is when you get pushed further in the algorithm to way more people, you get a lot of crazy people. Like when the audience is small and it's kind of like a niche number of real, kind of people that watch the content on a regular basis, the comments are generally respectful. Once you get into the big leagues, I guess, of trading YouTube and trading space, my content creator friends who are much bigger than myself, for example, like Tori Trades, she talks all the time about how her comment section is just terrible because she's got the biggest audience, right? She's got just floods of people who are watching her. And once you get into that larger audience, the comments get interesting. But yesterday I had so many people telling me how wrong I was going to be for being short on gold or being bearish on gold, and that it was a dumb idea and that everyone should fade my video ideas. You start getting into an interesting cohort of people once you get past creating content for a small niche group. Anyways, I don't know where gold is going to go with certainty ever. And if you watch my videos, I do hope that you pick up on that. I've been doing this for 10 years. I've been trading for 10 years of my life, and I can't tell you with certainty where gold is going to go next, right? Yet the comment section always seems to be able to. The comment section is so for sure knowing what's going to happen with gold next. I'm saying that jokingly because in reality, nobody really does. You'll see comments who people say, gold is certainly going to break higher, this is the bottom. And you might be right. I'm not saying you're not. I'm not saying you're wrong for sure. I'm saying if you are that person, understand that a little bit of humility goes a long way in trading. Because if you believe gold is going to go down like I do, I think gold probably trends lower from here. But there's two ways to approach this. There's the rational, humility, understanding that markets are difficult to predict strategy, which is, I think gold goes lower. If it doesn't, I'm wrong. I need to get out of there, cut my loss, take a little hit on the wrist and move on to the next trade. No big deal. We're going to be wrong sometimes. That's mentality number one. Mentality number two is traders, if you want to call them that, I don't know that they deserve the title. The people who are so sure that something is going to happen, that gold is going to move lower or gold is going to move higher. They're so sure of it that they bet everything on this one trade because they're so confident. They heard some guy in a video who was making the case for a bear case or making the case for a bull case, and they're so sure that gold is going to crash or rise that they bet inappropriately. And let's say that they bet that gold's going to go lower and it doesn't. Let's say it bottoms. That person blows up their account, and guess where their messages land? They land in my DMs telling me, hey, Nick, what do I do? I've lost a ton of money. I thought gold was going to go up. I thought gold was going to go down. I've blown my account. I'm in a desperate situation. That's what happens, right, to those people. Whether they tell anyone or not, trader number two comments nasty things all over the social media. Hey, gold is clearly going to do this. I know gold. And quietly, they lose a ton of money and then they quit trading. Trader number one stands a chance. Trader number two does not stand a chance in the long term. Okay? In the long run, having humility in markets is not just being a nice guy. Having humility in markets is survival. Okay? Because let's say, I think, and now we'll make it more localized. I do think gold is going to move lower from here. I think that we've got a good potential to see gold test those lows and beyond. I also really like this 4,200 level of resistance that we're tagging. So I might say, okay, I think gold's moving lower. And let's just say I can adjust my stop to account for the possibility that I could be wrong in this theory, right? Trading is like the science. It's like the scientific method. You have a theory, right? You don't have a certainty of what the outcome is going to be. I love when Nick goes on a vent. I've been doing it a lot recently. And I think that if my videos keep getting these number of views and I keep getting these, wild comments, I'm probably going to go on more rants. So I apologize in advance if you do not like them. But anyways, let's just say this is the theory, right? The theory is, I think gold moves lower. How am I going to manage this? So I am not in a, I'm looking to get back into gold shorts. I'm not currently in them. I'm not opposed to potentially just selling right around these current levels as New York session gets going. And let's just say that where do I want to define my risk? Well, I don't like the idea of holding gold if it's going to break this 4,200 level. I like 4,200 as an area. We've talked about this for weeks, or the last 2 weeks, I should say, on the channel, looking for downside continuation for gold. I am looking for price to make its way back down to these lows and break through it. That tells me, all right, we're good. We're good. The sellers are in control here. But there's even more that tells me that. Like the moving averages here, right? The 20 period moving average is getting retested. If we want to go retest the 50, it's possible that that is the case. Then I'm going to go ahead and get out of that trade, right? That idea is nullified. If we start breaking the 4,200, let's call it 4,250 gets violated to the upside, right? We push past that. I may look at the 4,350 as a next level as long as macro still aligns. But right now, I think you're still in. If you're looking at like the 15-minute or the 30-minute chart, it's going to look like, oh, the thing's in an uptrend now. But I'm more of a 4-hour and daily chart trader. And so when we look at the 4-hour, this is still a downtrend, right? You've got most of our moving averages aligned to the downside. Look at the daily, right? The daily looks even cleaner. Daily chart, you've got your moving averages still pointed lower. Price is retesting resistance in the context of what is a downward trending chart. So I am not opposed to switching to bullish on gold if the chart shows me it's time to be bullish. But right now, we don't quite have that. And if I add in some macro flavoring here to take a look at what's going on with gold, I get more confidence to being more on the bearish side. So when we look at gold's bearish reading here, a lot of it is macro fundamentals. We've talked about this. I don't want to overwhelmingly talk about this subject too long, so we'll keep this brief. Economic growth has been stronger than expected across our 5 metrics for the most part that we track: PMIs, retail sales, GDP growth, consumer confidence. Most of these metrics, the 3 out of 5, are pointing towards stronger than expected economic growth for the US. Inflation coming in, giving us a bearish reading here. That's primarily due to the producer price index and 2-year yields generally in uptrends, and specific to PPI, the inflation reading come in higher than expected. Jobs market, right? Jobs market, yes, the non-farm payroll number. I had someone who was very upset. They were like, Nick, you're missing that non-farm payroll was weaker than expected. But as we've said many times, if you're a regular viewer, you know that what I'm about to say. This is just one metric, right? Non-farm payroll is an important metric. Do not get me wrong. But so is unemployment rate. So is weekly jobs claims. So is JOLTS job openings. These metrics came in solid, better than expected, right? The other thing we're going to say here about the non-farm payroll number is that when you take a closer look at the context, right, you want to understand these trends. These are things that are absolutely market moving to gold, etc. You go take a look at NFP and you say, we've had 3 stronger than expected jobs reports and 1 new one that came in weaker. Now, if in 2 months from now, we've had 2 additional weak non-farm payroll numbers, then I'm with you. Then I'm like, okay, the trend is bearish for jobs. But 1 data point is a little too soon to try and jump to the conclusion that, oh yeah, the jobs market's data is terrible, right? We just talked about, I just showed you some of our other metrics are not so bad, right? So yes, the non-farm payroll headline number itself was not great, but it's 1 print, and the other prints that we have here look okay. You see what I'm saying? We're trying to take a rational, full picture view of the jobs market data. We're not trying to isolate just the non-farm payroll number and jump to some sort of conclusion on it. Gold's down 1% today. Okay, so we got a little bit of downward movement going. Yeah, price came up. Look at this, guys. Are you kidding me? 4,200, like hit it by a nickel and dropped. I think for the bulls out there, if you're watching gold from a bullish perspective, watch this level, because if you get a bounce here, keeping an open mind, even as a bear myself, if that happens, then that looks more bullish. But I would not. So here's the thing, right? If you have a overall bear trend, right? The overall trend is bearish, and you come into support, I'm still going to generally squint my eyes at support levels. I'm going to favor resistance levels in a downtrend, and I'm going to favor support levels in an uptrend, right? Wow, we got 616 people watching between all the different places we're streaming. That is a huge number for a non-news data day. So thank you for being here. I hope this was helpful. Was this gold trade not published in the VIP? I'm sorry, that is confusing. I am not in a gold short position. I was talking about a possible one. So sorry about that. No, I am not in a, I got taken out of my previous gold short position. I'm watching it for possible re-entries this week. But yes, the 4-hour chart looks beautiful here. In fact, if we were to get a bounce off this level, I actually favor the idea of joining the trade. So I'm going to keep an eye on it this morning. Very, very interesting. The 1-hour chart, just a quick look over here and a little bit of lower time frame stuff. If you're bearish on the lower time frames, look at this level. You got maybe 41.30 is a spot to watch, because if this level breaks, that could be kind of an early signal that maybe the higher time frame is taking over again, the 4-hour and the daily. Next, should we hold short positions? I'm confused. I promise I'm not trying to sound like a total jerk when I say this, but I mean it with love, okay? You should do what your back-tested trading strategy tells you to do. You should not be looking for me to tell you what to do with the chart, okay? I genuinely, like, I'm trying to help you with this. If you are trying to be a profitable trader, never ask other people, should I sell, should I buy? That is the worst question you can ask, because even if I told you, there's no good outcome for you. If I say, oh, I'm selling, I think you should sell, which I will never do that, because this is not financial advice and I'm not telling anybody else what to do with their account, first and foremost. But even if I did, right? Even if it worked out, all I did was build you reliant on what I'm saying. That doesn't help you in the long term, because I am also wrong all the time too. Nobody's right all the time. And the other thing is, you have no idea what makes a profitable strategy. If somebody just tells you buy or sell, that doesn't give you any context. It doesn't tell you how much size you should put on. It doesn't tell you what percentage of the time you generally see wins on that idea or losses on that idea. It doesn't tell you what the normal drawdown for a strategy of that caliber is. You have to take into consideration all of these things if you're going to be taking a trade. But understand, I'm not trying to in any way insult you, but I am telling you, never ask that question. You should only do what your strategy that you have spent a lot of time working on, backtesting in a demo account, tells you to do. You can watch my videos to hopefully get some insights on what's going on with gold. I can maybe share some ideas that I'm doing, get you thinking about your own ideas, but I'm not here to tell you what to do with your account. And if I did, it wouldn't actually help you. Because again, if you watched every single one of my videos and tried to copy what I was doing, there would be times where you think I'm a hero, and there would be times where you think I'm an idiot. But I make money in the long term in the markets because I have a system, a strategy, a risk management profile. I've worked in my trading psychology over 10-year periods. Like, there's a lot that goes into profitable trading beyond just buy and sell ideas. Does that make sense? So that's all I'll say on that. Okay, so let's also just take a quick look at what's going on. Silver is also moving lower here this morning. Oil's lower this morning. Bitcoin's down 3%. My goodness. Bitcoin, look at that candle coming in. Daily chart, not super promising for the crypto crowd here today. Yeah, this is potentially forming another lower high. Ethereum looks very similar. Bond yields, this matters for gold quite a bit as well. Bond yields here moving a little bit lower today. And if we take a look at stocks are kind of flat here. Dollar index is holding up okay. I thought we would come down and retest this area of support, to be honest. But did we? Let's see. Yeah, we kind of did. We kind of did. I thought we'd test a little bit deeper than that, but I'm going to update my charts here. We never tagged this trend line here. So that is possible that we still come down, test that idea. But trend lines are, I don't think they have to get retested by any means. Nothing has to happen in markets. Anyways, dollar index, major level of support, did get tagged. 100 point. I thought it was 100.5. I think I'm going to revise my number to 100.6 because 100.5 never got tested. And we've got a good candle forming here. This is strong for the dollar here out the gate this week. And notice how Thursday and Friday you had on the DXY sharp rejection from this area 2 times in a row. Like intraday, that was a very strong, like let's look at the 15-minute chart. Look at this. You came down here with violence, right? Big drop. Buyers stepped in. Came back, tried again. Technically put in a higher low, trending higher. Dollar index looks good to me. I still think that you have, and again, this is part of the reason why I still like the gold short idea, is that the dollar still looks really strong. Does the edge finder take into account the world events like China's new gold system and the wars, Russia and Iran? Kind of, not in the same way that you might expect, but economic data is oftentimes reflective of what is going on in the world. So edge finder tracks economic metrics, which I like even more because it adds a measurable number to something. Right. So edge finder is looking at GDP growth. It's looking at PMIs. It's looking at consumer price index, inflation, yields. These things are looking very much at what is going on in China, in Russia, in Iran, oil prices. All of those things materialize in the economic data. So I really like centering my analysis on what is going on in the economic data. So edge finder absolutely does factor in what is going on in the real world because the real world impacts our data. Does that make sense? Love your trading analysis. Please keep it up. Thank you, Samuel. I appreciate you. Nick, you watching the JGB yield? Let's take a look at it. Is it moving higher again? Ooh. That is intriguing. That's very, very interesting. So let's explain this theory a little bit. Japanese bond yields ripping here. 10-year yield, highest level ever? Highest level ever. We've equated this many times to a global rate hike. Let me explain. With global rate hike, what do I mean by that? Well, if the Bank of Japan raises rates, which they're expected to do, excuse me, interest rates data. Let's look at projections for the Bank of Japan. All right, so Japan is in green for us here. Expectations are for the Bank of Japan to modestly hike rates. Granted, if this thing keeps screaming higher, they might hike rates. I don't know if I said cut or hike, but let me clarify. The Bank of Japan is expected to hike interest rates. They're dealing with inflation. They've dealt with some growth here that's good for their economy, but at the same time, they don't want inflation to get out of control. Their country is very sensitive to prices. Prices haven't changed in Japan in a very long time. So all of that said, this chart threatens the stability of global interest rates. Let me explain. If Bank of Japan hikes rates, they're the anchor on global interest rates. They have really low interest rates for a long time. Sovereign nations, pension funds, hedge funds, individuals, all these wealthy groups have been borrowing money from Japan at low interest rates. They have leverage lent to them by the Bank of Japan at low levels. If the rates keep going higher, that trade gets pressured on. Let's just say, for example, you were borrowing yen to buy dollars to buy US treasuries. Let's take that example. Sorry, US is in red. Okay. If you borrow yen, you are effectively selling yen, right? So if you look at the Japanese yen for a long time, why has the Japanese yen been so incredibly weak? Well, because people for a very long time have done this trade where they borrow or sell Japanese yen from the Bank of Japan, and they take that money and they go put it somewhere else in the world where they can get yield that exceeds that borrowing rate. That borrowing rate has been super low. What if I told you for my US and UK and Canadian and Australian friends and all the other places where interest rates are, have risen in the last few years? What if I told you that you could go out and we could get in a mortgage, or we could get you could borrow money back a couple years ago for 0.7% per year? That's like free money, right? Free borrowed money. You still owe money on it. Do you see what I'm saying? That's a really attractive borrowing rate. But now it's 4%. That's alarming because that trade doesn't work anymore. If you want to go borrow money cheaply, Bank of Japan still offers a cheap rate relative to other places in some ways, but 4% interest is very different than 0.7. Okay. So that is globally, if this was the low end of interest rates across the globe, now it's high, right? Now it's rising. And it's just been unbelievably, unrelentingly moving higher. And the Japanese yen has been trending lower because the Bank of Japan, in the eyes of the market, isn't hiking rates fast enough to compete with the destruction of the currency. It's a problem because if the Bank of Japan suddenly says, all right, no more free lunch on Tokyo's dime or Tokyo's yen, we need to hike rates more aggressively. If that happens, global interest rates will likely go up, because what happens is the Bank of Japan is a massive holder of US treasuries, okay? If they need to defend their currency more aggressively, what do? They sell US treasuries. What are US treasuries denominated in? US dollars. Do you see where I'm going with this? If the Bank of Japan at some point, I don't know when, gets serious about defending their currency, about raising rates, about being more hawkish, this currency pair could come down really hard. And with it, they would sell a lot of their holdings. Japan holds tons of US tech stocks, holds tons of, or at least is connected to the infrastructure within this market that holds tech stocks. Remember all those sovereign groups borrowing Japanese yen to then go buy treasuries, stocks, real estate, risk assets in general? It is something to take note of, that if at any point the Bank of Japan decides to get aggressive with rate hikes in Japan, it could be a significant unwind in risk assets. It could be a complete re-rating of the valuation of stocks. And it could mean even more pain for Bitcoin. And I've talked about this many times on my channel. I think a big reason Bitcoin has already moved lower is partially due to tightening in rates around the world, made more pressing by Japan. That's my theory. So we'll see. Yeah, imagine what happens to Bitcoin then. Yeah, Bitcoin's already in trouble. If it gets more aggressive, I think it would be more painful. How does that impact gold? Well, it's an interesting one. The process of central banks getting more hawkish in recent months has been a really devastating thing for gold price. Gold price has dropped $1,000 an ounce plus, $1,300, $1,400 an ounce plus. It has been a pretty devastating drawdown for a lot of people in gold. If you had any leverage on gold, probably blew up if you bought the highs, right? Down 30%. Central banks raising rates tightens money supply. It's like the opposite of money printing. Now, if you're a long-term bull on gold, then what you say is, all right, yeah, gold is going to be in trouble for a while, but at some point, central banks, they're in too much debt. They are going to have to keep printing money like crazy. So the long-term catalyst for gold is higher, in my opinion. But in the here and now, short and midterm, I think gold can continue to trend lower. I don't know where that trend stops. And I had a lot of people point out to me in the last couple of days, well, central banks are buying gold. Well, yeah, they've been buying gold for 20 years, or not that long, but they've been buying gold persistently, consistently all the time for a long time. That does not mean, clearly, if gold can drop 30%, just because central banks are accumulating gold over time does not mean gold cannot have sharp drops in between. I think it is a bull case for gold long term, but we could drop another 20% in gold. It's possible, right? Especially after such a crazy run up. There's a lot of this. If we were to see a 50% retracement on gold, that would put us down at 3,700. If we were to see a 61.8, it's 3,250. It's possible that gold does that. Probable to go down to 3,250? I would say probably not. But could we go down for the next few weeks and months? Possibly. So that's my theory. That's where I'm at with gold. Selling rallies until proven otherwise. And what I mean by that is that if price breaks resistance decisively, if CPI and jobs data starts flaring in a way that is positive for gold, I'll change my tone on it. I'm not married to the idea that gold has to go lower. I'm not emotionally invested in gold going lower. I had a lot of people commenting on that too. They were like, Nick, you just want gold to go down so bad. You're so married, you're so obsessed with the idea of gold going lower. And in absolutely no way am I obsessed with gold going lower. I really could care less if gold is going up or down. I said this in my video yesterday. I'm obsessed with the process of analyzing these metrics that I've used for many years and aligning myself with them. If they change, I don't care if the chart starts going up and it's going up on good fundamentals that I like here, I'll be bullish. There's no emotional tie to gold going down. Long term, I'm a gold bull. Short term, I still have the metrics I need to be bearish. And if that shifts, if that flips to bullish, then I will flip bullish too. There's not an emotional tie here. In fact, I would actually argue that a lot of the comment section being very upset with me that I'm bearish on gold shows more of a emotional tie to wanting to be bullish on gold. But there's no emotion in just saying, hey, my system, mechanical rules-based system, tells me bearish. I'm going to look for opportunities. I agree with that idea. I'm going to look to sell on rallies with a stop, and I'm going to manage my risk. As always, this is not financial advice. And if you're interested in getting the same system that I use to analyze gold, silver, dollar, currency pairs, commodities, indices, etc., Edgefinder has it all in one place. We have a wonderful team of people behind the scenes developing and maintaining this product. If you are interested in getting access to Edgefinder, now is a really great time to do so because we're currently offering our biggest sale of the year. We're doing our summer sale. For 40% off, Edgefinder is available to live stream viewers. If you're interested in that, we'll drop the link here in the live stream chat to where you can get access to the tool via a payment plan if you need access to it that way. Some people are like, I want the product, I want the discount, but I can't make the payment today. All right, set up a payment plan. It is way easier to do that. And here we go. The link is in the live stream chat right there. You can also scan the QR code that is below my camera if that is easier for you to take advantage of the sale discount, or it's in the disclaimer or the description down below as well. But again, if you're interested in getting access to the tools that I use to scan markets each and every day and keeping fundamental analysis automated, which I think is the only way to do it. If you want to implement macro fundamentals, doing so by hand, trying to read articles all day long it's just like banging your head against a wall. You need a tool, something that tracks all of it in front of you, keeps it on your radar, and simplifies the interpretation process. We've isolated a list of things that we think are important to keep an eye on, and we've automated the scorecard system, which we use as kind of an in-house proprietary way of metric scoring of all of this stuff to build out our overall scoring. Anyways, if you do not have Edgefinder, now's your chance, 40% off for a limited time. And if you are watching live stream wise, click the live stream link that just got dropped to set up a payment plan. Guys, up next, we have the one and only Mr. James Lane taking a look at more markets here. Don't go anywhere. He's going to be after just this quick break. And then we've got him taking over the show to take a look at more markets, including gold, currency pairs, commodities, and more. Stay tuned right after this. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello, ladies and gentlemen. Happy Monday. I hope you all enjoyed your weekends. So, not too much going on with me this week so far. I'm still in the Nikkei trade. I showed you this one last week. Nothing's really changed. Currently hanging just under 1% profit, exactly where it was last week. So no real update on that one. And I did take a gold short this morning. So I've currently got an entry at 4,152.78 with a stop loss at 4,277. But yeah, not really much going on. I think Nick covered gold quite well, actually. It's basically exactly the same reason I'm taking it. From a technical side, obviously the fib from the high to the low, pull back into the fib zone, retesting previous structure, looking for a continuation lower. Very simple stuff on a technical side. Fundamentally, we still got gold reading bearish, which is really nice. I think it's -7, which it is here. So gold is still getting that bearish reading. So fundamentally bearish, technically still bearish. So yeah, I mean, I was talking about a potential long idea on gold, which I can go over if anyone's interested, but I think the easiest way is still short. Sluggy, hello. Gray Fox, good day for me today in gold so far. Very nice. Me too. XAU looks okay. We'll add to shorts. Very nice, Sluggy. Hello, James. Can you take a look at GPNZD? Yes, of course. Pound New Zealand just broke up and retesting 2.35. Okay. Yeah, we can take a look at that market. What else is going on? The chart's moving quite quick today. Also, gold just hit a trend line from the second time. Yes, I think that's the same trend line Nick had drawn up. I don't really use trend lines. Normally not on the H4. I will on higher time frames, like on the dollar is a good example of the DXY. I'm happy to use trend lines on, weekly, monthly time frames, but lower time frame, I tend to ignore them really, unless there's something really obvious. It's coming home. It's looking all right. Again, I'm not a football guy, but or a soccer guy for the American watchers. But yeah, I woke up this morning to the news. I'm not staying up to watch the football. I saw a UK influencers saying, you're not a man if you're not staying up to watch the football game. I was like, nah, markets open at 8 a.m. I've got other things to do. Anyway, 79 Jeremy, hello. Chile retirement. How's it, brother? I'm good. How are you? G'day, mate. Wow, lots of people in the chat today. It's really good to see. Hope everyone's enjoyed the weekends. Let's get to markets. Let's stop rambling. So what was the request? Pound New Zealand. We'll have a quick look there, and then we'll move on to some other things. So the UK, nothing's changed in my view. I think we are still getting, obviously, the bullish bid on the back of political stability or optimism around the UK political landscape. Obviously, we've had Keir Starmer stepping down and resigning from PM. We've got Andy Burnham that's pretty much guaranteed to take over this point. So the markets are quite happy about that idea that we've now got, again, that stability within the political landscape in the UK. I do think this is a short-lived or will be short-lived. I could be completely wrong, of course. The pound could completely rally from here and continue to rally. But I don't think the pound strength is something that I would really want to get involved with. I think it's, again, more of a short-term repricing rather than a fundamentally driven move. In fact, I'm still very certain that the UK is going to continue to weaken over the next couple of years. So I'd rather stay on the short side long-term. And then short-term, if there's something to benefit from, then yes, sure. So in that respect, I'm not really interested in this at the moment. From a technical perspective, though, we are actually breaking this pretty significant level of resistance, which is around, I've got really small text. You know what? I don't know why this is so small. Let me zoom in a bit. It's my birthday tomorrow. That's why I need bigger text. I'm turning into an old man. So yeah, we're breaking above the resistance at around 2.34 or 2.35. So I think if you're not already in a long position in this market, it would be more a case of either you'd want to see the break and retest and continuation if you're a buyer. If you're a seller, there might be an idea of fading this move, looking for a small mean reversion. And then if you're a buyer, maybe some sort of pullback. I think the easiest way to go is to continue with the trend and, again, continue with that UK optimism that we're seeing. But just from my personal grievance with the UK, I wouldn't want to get involved. That doesn't mean it's not a good trade idea, though. It's just me being stubborn. On the Edge Finder, I don't think we've got anything for Pound New Zealand, at least not on a solid bullish or bearish reading. We've got a 4. A 4. It's not good enough for me to trade on. I can't do anything with a score of 4. It's too close to neutral. I always say this. My threshold really is 6, so +6 or -6. And that I'm a bit more comfortable with. 5 and 4, too close to flipping back to neutral for me. So I tend to ignore them. So from a fundamental view, there's not really anything I can do here. Sorry. It's never coming home. Maybe not. We'll see. Although Norway's been doing really well. Haaland's been carrying. And again, I don't know anything about football. So for me to know that is quite impressive. PMI not yet. Do we have PMI today? I've got no idea. Let me check. Hold on. Bear with me for a moment. Let me just check calendar. Make sure I'm not missing anything on stream. Can't be doing that. That would be rookie errors. So what day is it today? Monday. We've got ISM non-manufacturing employment, ISM non-manufacturing PMI. So when does that come out? 3 o'clock. So is that now or is that in an hour? I'm not sure what time zone my calendar's on. Happy birthday. Thank you very much. Appreciate it. So yeah, I won't be on. Happy birthday, 30. Wow, that's insulting. No, I'm turning 22. 3-streak win for you. What, you mean in the football or do you mean in trades? Because both are true. Any news on yen intervention? I don't think so. We did have news yesterday. Sorry, not yesterday. Friday of potential interventions. For clarity, I'm not in this position. I really wish I was, but unfortunately I'm not. So yeah, there was suspicions of an intervention on Friday. Whether that, Thursday, actually, not Friday. Whether that's true or not, I don't know. I'm honestly not sure. I don't think it matters. So unfortunately, my hesitation got the best of me here. I really did want to buy on this fib, but I was more in the mindset at the time, the market was moving quite strongly to the downside. There was a lot of momentum in the market to the downside there. I was thinking, if this is an intervention, I don't really want to buy into it. You know, I'd rather wait for what we've seen previously, where we come down to this 200 daily moving average, and there I would be a buyer. However, in hindsight, that was obviously a silly decision. I should have just gotten in on the entry because my entry criteria was met. So we pulled back into the fib, pulled back into this 200 moving average. RSI was oversold, retested previous structure. You know, it was all there. It was just my own hesitation that stopped me getting in here, unfortunately. So I think dollar yen is really a case of just buy dips, not financial advice, of course. Do your own due diligence on each dip, of course, but I think the carry trade dynamic is still well underway. That's not changing anytime soon. So yeah, there's not really much to say about dollar yen. It's more a case of when it dips, I would be quite happy to be a buyer. Obviously, again, in hindsight, that's easier said than done. Yeah, flex buyer, maybe. I don't know. I think maybe. I was very tempted to put a bet on yesterday that the UK would lose or England would lose. I didn't do it, and luckily I didn't do it because we obviously would have lost that bet. So maybe I'll do another one. Service PMI in 1 hour. Yes, it is in 1 hour. I'm a smart 22. No, I'm not actually 22. I'm turning 28. I can already feel the back pain. I've already got glasses. It's all going downhill from here. I'm gonna have to get into my retirement fund soon. Start thinking about what I'm going to do when I'm an old pensioner. What's my average winning percent per month? It's hard to say. Average, let me see. I can actually give you the number. Hold on. Off the top of my head, I got absolutely no idea. 2%. Well, 2.06% is average. I've actually just got a Darwin account as well, which is quite interesting. So we'll see how that goes. Oh, sorry, that's the wrong word. I've had a few Darwin accounts. I've just actually got a, what do you call it? Calibrated Darwin account. Actually, I would short dollar yen if it fails to close above it. Change of character. Close above. Oh, do you mean the previous high or what? Happy birthday wishes from India. Thank you very much. I appreciate that from my Indian or the Indian viewers, not my viewers. I'm watching shorts between 163 and 165 speculative positions. 163, 165. Yeah, I think it's one of those things. I really like the idea of it, but it's just a case of actually getting into the trade is really tricky because I was shorting dollar yen down at 160.5, give or take. I was short around this area, basically expecting the same thing. You know, we reach 160 zone and then we have the intervention. I was banking on that idea. Didn't work out. You know, I think it was more a case of a lot of people were expecting that idea, and it was just became too obvious, not worthwhile doing. So that short very quickly got washed out of the waters. But then, you have the idea of, yes, trying to sort of speculate on it and essentially gamble. It's really 50-50. Do we get to 163? And then do we get the intervention or do we not? It really is essentially a 50-50 bet. I would say it's very possible. So maybe going short at 163, short again at 164, 165. I get it. But then, the idea is, again, the fundamentals are bullish for dollar yen. It's a great carry trade market. It is going to drift to the upside fundamentally for the foreseeable future. So it's really a case of, if that doesn't happen, you're just going to take loss after loss after loss, and it's just not going to be pretty. So for me, it's not worthwhile doing. But again, I understand the thought process. AUD/NZD short second. Yes, actually, when we're talking about New Zealand US dollar, Credit Agricole taking another short position. So some of you who watch my segment specifically will remember I was going short Aussie New Zealand earlier in the year. Where's it gone? Hold on, let me just here. Yeah, so Credit Agricole is short. That entry, actually, let me pull it up on the chart. Let's get rid of this. Let's go to Aussie New Zealand. We'll go weekly time frame. The stream is at 1,500 viewers now across the different platforms. So everyone watching, thank you very much. Make sure you are following, subscribe, dropping likes, all that sort of stuff. It does help out. This isn't my channel. I am a guest here. But the owner, Nick, and the A1 team do a fantastic job. So if you are enjoying my segment or Nick's or anyone else coming up, make sure you are showing some support. So Credit Agricole's entry, 1.25, 1256. So that entry is there. Profit level, they're looking at 1.16, which is the high of the range. Stop loss is at 1.247. That can't be right. Hold on, sorry. 1.247. There we go. So this is Credit Agricole's position on Aussie New Zealand. They're currently underwater, so I'd assume they entered last week, so it might be something a bit more like this. Again, this is basically the same idea I was going for earlier in the year, banking on the fact that the RBA slowed down, well, actually back on pause after hiking rates 3 times, looking for a bit of a mean reversion and an unwinding of long positions on the Australian dollar. I fell out of love with that idea. I was really, really sure it was going to happen. We had a move to the downside here. Didn't follow through to anything, just complete rejection, and basically got bought right back up. Once that happened, I closed the trade break even. It just wasn't worth holding. But on a higher time frame, like the weekly, we see the RSI became extremely overbought. Obviously, it's kind of back in the range right now. We're retesting this weekly level of structure. We've broken out of this, how long was it? 12-year range, 13, 14-year range, depends exactly where you measure the range from. So again, that sort of mean reversion idea, I think, is completely valid. But I've already taken one attempt. I don't really have another catalyst to warrant taking another one. So I'm going to sit out. But I think there is an argument to be short. Okay, let's see what else you guys are saying. Nick, you were doing a good job enlightening us. My name's not Nick. Oh, my name's not Nick. I'm James, but I appreciate the support. What broker do I use? I use 2. So I've actually, like I said, I just got a Darwin account. And I trade with Interactive Brokers as well. So personal is Interactive Brokers, and then Darwin is just to really see what happens. There's people on Darwin actually. I don't really like Darwin too much. I think the fees are a little bit expensive, but I was looking at it again a couple of weeks ago. I was like, there's people on there with like 15 million assets under management, and I was like, you know what? I wouldn't mind a bit of that. I'll jump in, see what happens. Is COT dated today? Yes, I think. So we didn't get it last week, obviously, because it was the US 4th of July, I think it was. So 26. When was what date was Friday? I've actually got no idea what date Friday was. Let me just see. Does anyone know what date it should be? So 5th was Sunday. Friday was the 3rd. Obviously, actually, 4th of July is Saturday. So yeah, I don't think we do have the newest COT data. The last one on the Edge Finder anyway was 26. So we are still 1 week delayed, well, 2 weeks delayed technically. So it should be coming out today, as far as I'm aware, but not yet. Waiting on pound New Zealand short entries 3rd of July. Thank you, Demo. Yeah, Aussie New Zealand shorts I think makes sense. I'm running out of time. I've got about 10 minutes left, so I'll speed run through actually what I'm looking at this week, because I don't think I've actually covered anything really today. So UK 100, I really like this idea. However, there's no entry just yet. Let me reset the chart here. Oops, that's not what I wanted to do. Here we go. So very simple, bullish trend with a 250 moving average, fib from the low to the high, looking for a pullback into the fib zone, retesting the previous highs or previous resistance now as support, and then looking for that rejection to the upside. Basically, you know, UK 100 or the FTSE is bullish on the edge finder with a score of 8. It's the most bullish market right now, fundamentally speaking. So I quite like the idea. It lines up with my basic framework of trading, you know, pullback, trend, edge finder, very simple stuff. So that's that. Same thing really with the DAX. I don't like the DAX as much. I think the technicals are a little bit more loose and it's not on the edge finder. But yeah, similar idea, pull back into previous highs. Again, this doesn't line up with the fib zone, so it's not fantastic, but the idea is there, I think. And then looking for, again, that sort of continuation to the upside. US 30 or the Dow is on the edge finder. Only score 5. Again, as I said earlier, scores of 5 and 4 really aren't my cup of tea. I need like at least a 6 because I'm quite demanding. But if we see a reasonable pullback towards, you know, the 200 moving average, kind of like what we saw over here, I would happily take an attempt and see what happens. Pound yen, again, actually similar to dollar yen. I was looking to be a buyer, but didn't manage to get in. So it's back sort of over here. When we were having this drop, I was looking for a retest of this high. And then, you know, again, that sort of rejection continuation, which is what happened. But you know, unfortunately, I missed it. Fumbled the bag on pound yen and dollar yen, so definitely not my prime time, if you will. Pound Australian, maybe looking to go longs, but not really in favor of it. You know, the daily time frame is still in a downtrend. We created this sort of double top here. I think the technicals are a bit horrible, to be fair. And again, I don't really want to buy the pound, but it is on the edge finder as a bullish reading. So I like to mark them up, even if I'm not planning to actually take it. Silver, continuing lower. However, I'm also in a gold short, so I'm not interested in going short on silver at the same time. I don't like to double up exposure when it's not needed. Euro Swiss actually might be in for a short position here. So as far as I remember, Euro Swiss, yes, very bearish reading, -10. So Euro Swiss here. Pulling back into previous structure, it's not perfect. You know, actually, technically, the lows are kind of down here. So, you know, give or take, it's not overly important how accurate it is, as long as it lines up somewhat. Rejection of the 50% fib level. So if we can see this H4 candle close bearish, and hopefully, if we're fortunate, engulf past and close below this 200 moving average, I would be really happy to get in a short position. So it'd be more like this, I think, something like this. But yeah, that's kind of all I've got actually for Euro Swiss, and then looking for a take profit down to the previous lows around 0.91. We do also have a slight downside with this one though, that the S&P or what's it called? Hold on. What was I looking at earlier? Hold on. I saw something earlier that I was looking to actually take the position, and there's something that threw me off it. And I can't remember what it was. I can't remember what it was. Great, fantastic trader. Can't remember what I was looking at. Anyway, doesn't matter. There was something about the 0.92 getting defended though. But yeah, we'll see about that one. So it's not on the top of the list of what I want to trade, but I quite like the setup so far. Same theory applies for Australian dollar Swiss. It's basically 1-to-1, so I won't go over this one. Yes, not wanting the Swiss to get strong yet, defending 0.92. I was trying to find the exact source of where I got it from, but I can't seem to find it at the moment. And last up is Euro Pound. So this is probably the only one where I would really be okay with actually buying the pound or holding the pound long. And the reason is mainly because of the market behavior on Euro Pound. So if we go to the edge finder, we are seeing Euro Pound getting a bearish reading of 5. So again, not fantastic reading, but it is there. But in this case specifically, Euro Pound is a very mean reverting market. So oftentimes, you know, we have either short-term or long-term moves, it doesn't really matter. So, here, short-term, massive spike to the upside, then very quickly reverted back down. But then if we look at more sustained moves, like what we've had here, where we have a more prolonged move up and a bit of a range, same thing here. Prolonged move to the upside, bit of a range, and then correction back to the downside, following that mean reversion idea. So it's more just the behavior of this market. I wouldn't mind going short. Now the fundamentals are lined up for that idea. So in terms of actually getting an entry, of course, fib from the high to the low, looking for a pullback into this fib zone, lines up with previous structure on the left, so previous support. So retested as resistance, and then looking for that rejection back to the downside. But that's it. That's all I'm looking at. So there's nothing really this week that I'm really excited about. So, over the past 1 to 2 weeks, one thing I was really adamant on and really quite into was this dollar strength. I did quite well on that with euro dollar short, but since then there's not really that much. I'm not overly interested in the dollar, to be honest. I quite like it to the long side, but it's, again, not my priority list right now. It's kind of just waiting for a new theme, a new dominant thing to come across the desk. So that leads me back to the only open positions I've got, which is the Nikkei and gold shorts. We do still have 4 minutes left, so let me just catch up with the chat really quick. Still getting birthday wishes. Much appreciated, ladies and gentlemen. It's very nice of you. Is gold sell? Well, does your strategy say gold is a sell? Candle wicks on Euro Swiss look like they are from Temu. I've never heard that one before, but I suppose that's an interesting way to say it. 22. Guys, I'm not actually turning 22. I wish I was, but no, I'm turning 28. Almost the big 3-0. That's when the downfall happens. Anyway, yes, so the gold long idea, I'm going to do it on a different chart so I don't mess up my current analysis here. So the argument for a gold long is that we've got a couple of different things, actually. I would argue that the argument for being a buyer of gold is actually starting to increase. So we've got RBC Capital Markets are bullish. Credit Agricole are bullish. Credit Agricole are actually in a long entry, which I'll mark up for you here. So Credit Agricole's position is, actually, let me just extend these so I can get the levels correct. So what the entry is 4338. The take profit, there isn't financial advice, by the way. I don't want anyone to see me marking up these trades by banks and take them, because actually banks typically underperform quite significantly. So don't take this as gospel, but it is interesting to see what they're doing. So this is Credit Agricole's position on gold. As you can see, it's not doing very well. So we've got a few banks that are bullish. We've also got the idea that we had weaker US data come out last week. Obviously, the labor market wasn't fantastic. So there is maybe the idea that the Fed isn't going to continue as hawkish as what the markets thought when we first heard Walsh talk, the one that sparked this real dollar pump. So yeah, those are kind of the other arguments. But then on technical side, it doesn't look too bad. So if we draw a level here, really nice rejection of our weekly support, or a weekly support here. Last week's weekly candle was pretty strong, sort of pincer. I think there's some sort of definition, some technical term for this. I think it's called like a tweezer or a pincer or something like that. Double rejection, nice wicks to the downside, really strong bullish candle on the weekly time frame. And one of the things I've been talking about is, the H4, the daily, the H1, all of the lower time frames do look really horrible for gold. It's really strong to the downside, but the weekly actually looks really good. So this, we've had a really strong multi-year rally on gold. Is this just a very normal, natural pullback for it to then continue higher? We've still got a really nice trend here. The RSI is oversold on this weekly time frame. So was it more of just a larger mean reversion move? Maybe. I don't want to subscribe to that idea because it goes against everything that I trade, which is obviously, the fundamentals and the trend. H5 is bearish, H4 trend is bearish, so I'm going to stick to the way I trade. But I did want to just show you guys because, again, I think it's a good example of always finding positives and negatives for your trade. It's very easy to look at your trade and say, oh, I'm going short because of this and this, and then completely discount everything else. It's confirmation bias. So I think the more you can identify different aspects and weigh whether they are worth paying attention to, or how they impact your idea is important. 30 creeping up. Indeed it is, unfortunately. Yeah. Egg USD. Fantastic. I've got no idea what the egg prices were in America, or are in America. I know it was a big deal when Trump came in. Anyway, ladies and gentlemen, it's my time to head off. We have someone coming to take over the show. Let me just very quickly check so I can hand it over nicely. So we've got Alan Perez, the one and only. Ladies and gentlemen, don't go anywhere. We've got Alan coming to take over the show. You're in great hands with Alan. Fantastic trader and really nice guy. Guys, I won't see you tomorrow. It's my birthday, so I'm taking the day off, but I will see you Wednesday, Thursday, and Friday. Have a fantastic rest of your weeks, and I'll see you all very, very soon.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good evening, good afternoon, wherever you are watching in the world. Guys, if we can just take 1 second here. We have a couple people here watching. If everyone could just pause, and if we can please give a happy birthday in the chat to James. James is phenomenal. I love listening to his segments. He's great at articulating his ideas and everything that's going on in his head. So if we can please just get one round of happy birthday for Mr. James. If you can please just type that into the chat. What a fantastic guy. Awesome. Let's go ahead and do that. And then we will go ahead and go over the top status page because we are starting to see some things changing here. And we have an important news release coming up here in about 30 minutes or 28 minutes or so. ISM services. But happy birthday, James. Let's get that James rolling into the chat. James Bond, happy B-Day. Let's keep it flowing, guys. Let's keep it flowing. Let's show the love. We have lots of things going on. We have ISM services this morning. We have the Fed meeting minutes on Wednesday as well. And then we have CPI next week. We have lots, RBNZ tomorrow night. So we have lots of things going on. There you go. Love to see it. Happy birthday to James. Big J, all of them. Thank you, guys. Yeah, he's really great. He's a great contributor. Again, he is just such a great addition, especially that accent of his. Right, really makes a good show. All right, guys. DXY. What are we doing with DXY? Hitting that 100.5 level. We bounced off of it here. And interestingly enough, I went over this here this morning in the A1 Trading Workshop, which if you don't know, guys, everyone watching here, we have an A1 Trading Workshop where we essentially go over the markets Monday, Wednesday, Fridays. On Mondays, we go over what's going on in the week ahead in the markets. We go over trade setups. We look at the Edge Finder and see how we can maximize the software. On Wednesdays, we go over, what's going on, how the markets have developed. And on Fridays, we take a proactive approach and look at the week ahead. This morning, we looked at the DXY and we looked at the ISM services number, the potential kind of opportunities that can come from it. And so we have the DXY here on a short-term time frame. If you look at the 4-hour time frame, you can see that we rejected that 101.8 level of resistance, that 102 level, and we are since on a lower time frame 4-hour chart trending to the downside. And if you put a Fibonacci retracement level here, you have coincidentally, it is hitting the 50% to that 61% retracement level zone right as we are approaching that ISM services number. Now, two things can happen here, right? Two things can happen. We can either get a super strong number, right? ISM services comes in really, really strong, and the US story continues to thrive. And in that case, you have, we just blow off this 61.8%, can't even talk, 61.8% retracement level, and we continue to the upside. The other thing that could happen is you have a weakening growth story, right? Weakening growth kind of number there hinting in that direction. And then you get a weaker US dollar, right? Weaker US dollar, weaker growth. mixed in with that weaker NFP number that we got on Thursday, right? That could potentially hint at a continuation of this shorter term time frame trend here on DXY to the downside. So it's very interesting how coincidentally, right at these important news events, you have the technicals just lining up, ready for something to happen. And so the way I'm kind of approaching this is if you get a strong US number, what am I looking to trade with? Well, if you get a strong US number, I like euro dollar to the downside. This is kind of how the trade will look like for now, a 1-to-1 risk reward ratio, and then the possibility of improving it if the trend continues to the downside. Maybe we stretch it to 1.12 or even beyond, right? I kind of like that trend. If you get a weakening US dollar story, well, there's a couple of things that I like as well. So I'm currently in this trade. This trade we discussed in the workshop last Wednesday. We were in profit here, and we are now retracing back just a little bit here, still within profit. But again, this trade can go against me if you have some strong US data here this morning, and it can go in my favor if we have some weakening US data. So right now you are seeing dollar Swiss here, which if you look at the edge finder, it is now getting a bearish reading of -8. So that gives me the confidence here that I'm going to continue holding the trade on until something changes. Again, I have my stop loss right above this structure here at 0.81439, and then have my take profit at this lower level here, this lower level of support where the 200-day moving average lives. So that's kind of the trade idea that I have for right now. Another thing, another possibility, if we get a weakening US dollar, I really like Australian dollar to the upside potentially. You can see here, I'm going to actually go to the weekly time frame. You can see here that this level of support, or it was once resistance here, rejecting price once, twice, 3 times, 4 times, is now turning into support. So we had a breakout to the upside. We tapped into this level of resistance here. We traded here once. We bounced up higher. We went back into that level of resistance, traded back down here again. We are now met with that 200-day moving average. So I do think that there is a possibility, if you have weakening US fundamental data this morning, that you potentially have a case where Australian dollar trades to the upside. We have this good level of support here. Now, the only thing that is holding me back as of now is that edge finder score for AUD USD is in neutral territory. So unless that number improves, I'm going to keep this one on the sidelines, but I really do like this trade here for now. Pound dollar too. Interesting one here, maybe to the upside. We had some political turmoil that the UK was kind of navigating. It has now since been somewhat resolved. You had the recent PM Starmer step down, and you have a new gentleman coming in, and that kind of relief there alongside with that weakening US dollar here as of last week did kind of help push the pound dollar higher. I think that if you continue to see that dollar softness there, then I do think that the pound dollar to the upside could be a wise trade. Again, contingent on that edge finder score. So we have this level here of support that we could trade on. The only hurdle that we have to overcome there is going to be that 200-day moving average. I really like, we have to overcome that here. And at that point, if you do overcome it, then 1.35 could be wise, somewhere around this area here. But pound dollar looks good to the upside. I don't know about shorting it to the downside. Again, maybe if we kind of hit this 200-day moving average and reject it, then possibly. But again, I think if you're going to short the dollar or go long the dollar, short something, euro dollar is probably my favorite one. Dollar CAD, super strong. We were going over this over the workshop today. We were discussing real yields and how money over the long term tends to flow into the higher yielding assets. And I kind of gave this kind of just example here. Like, let's say everyone here has $500 million to park, and you don't want to take any risk. You want to just go into bonds. Well, which bonds would you buy? Would you buy US bonds? Would you buy Japanese bonds? Would you buy Canada's bonds, right? And so the way you would make that decision is by determining where you get the highest yielding currency. So let's say you have, a couple $100 million and you're currently holding some yen. What we would do to kind of make this decision is we will look, okay, where can we get the higher yielding asset? If the yen is paying 1% and the US is currently at 3.5 or 3.75, the no-brainer question or the no-brainer answer would be, let's move that money from the yen into the US dollar. And so this chart here on the Edge Fighter basically illustrates that the higher yielding currency, it takes account interest rate growth, inflation. There's an equation that goes to it, and it basically tells you right here where the money is flowing over the long term. And here right now, the US dollar is getting the most high score when it comes to real yield. And if you look at the DXY chart, you can see that that has been illustrated here as well, right? Money is obviously going into the US dollar. Whereas you look at the very bottom of this list and you look at the Canadian dollar getting a bearish reading, the worst one, you can see if you pull up CXY, which is the Canadian dollar basket, look at that, right? Opposite. Money is flowing out of the Canadian dollar, going into other currencies that are yielding more. And if you go to USD Canada, dollar CAD, the relationship is obviously very, very obvious. Money is flowing out of Canada, going into the US dollar here. So when I look at dollar CAD from a long perspective, I really like buying this on any extreme dips. So if we were to get a dip into 1.395, I think that's a pretty good level, solid level to go ahead and buy dollar CAD, which if you put a Fibonacci retracement from this low to high, what does that look like here? 38.2 to 50% retracement level. Yeah, so that makes a lot of sense here. You can see here that it was previous resistance rejecting price here. Here we have since broke out of this level and we have not retested. So we've had the break, we just haven't had the retest. And so we want to trade the break and retest together. So we have to be patient for that one. But you have some strong US fundamentals. So maybe if you get ISM services weaker today, you have a softer US dollar. Maybe in the short term, you get some dollar weakness, but then in the medium to long term, you can have some good buyable dips in something like dollar CAD, where you have the real yield advantage in favor of the US dollar and at a disadvantage for the Canadian dollar. So I like that one. Kobe says, what time frame from X? Good to see that you're watching from X, man. What time frame? I trade personally on the daily time frame. I look at the 4-hour time frame as well when it comes to like measuring Fibonacci retracement levels and stuff like that. But for the most part, the way I watch a chart is going to be through the daily time frame. Gold prediction. I love that question. We talked about that today in the workshop as well. And if you guys want to join the workshop, it is completely free. We're doing a 2-week free trial. Again, essentially, it's making sure we're coming up with a kind of system here, utilizing the Edge Finder, integrating fundamentals into your trading, whether you come from SMC, ICT, wherever kind of trading strategy you're coming from. We are basically integrating fundamentals into your trading. It is completely simple. It is by using this tool here, the top settings page. Every single session, we go over it top down and filter out the best trading opportunities. But to answer your question on gold, this is a tricky one. In fact, today, when we were ending the workshop, I said, you know what, we're gonna practice some discipline here because we have a couple important data releases that we need to overcome. We need to overcome ISM services, we need to overcome Fed meeting minutes, and we need to overcome CPI next week. And I think that right now you're kind of in a decision point when it comes to interest rates. So we look at CME Fed Watch tool, we go to probabilities. You're basically kind of 50-50, 44%, 45%, give or take. Are we going to hike rates or not? And you can see that represented here by the US 10-year yield. So when the war started, the obvious thing was, inflation higher, interest rates higher, yields went higher. Now you're starting to see a little bit of a interesting thing where you're starting to see a somewhat of a downtrend here in yields, and they're kind of flattening right now within this kind of range. So the question is the Fed going to be restrictive or not? And so we need to have those answers covered before you make a strong directional call, in my personal opinion, for gold. If you continue to see yields elevated, interest rate probabilities higher in the US, then gold story continues to weaken, and that would make a really, really good short setup. If you start to see that story kind of change here, where global central banks are starting to turn on the money printers, start easing interest rates, well, that will go ahead and benefit gold to the upside. And so for now, we don't have those questions covered just now, in my personal opinion. So that's why I think gold right now, in the meantime, can kind of just stay flat. Though on the Edge Finder, it is getting a bearish reading of -7. So that kind of helps in the short term here, assuming that things don't change and the Fed is still somewhat restrictive, go to the downside. But I think if you want to make a longer term directional call, you would have to have those answers kind of answered there for you. So, or those questions answered, if I will. And so that's why we're kind of practice here. And what I advised here for the workshop members is let's go ahead and be patient and let's just see how sensitive gold is in the next week. Let's just practice that. Let the trade come to you. Don't force it. And if you want to join the workshop, you can join the QR code or join the Telegram channel, and we'll be posting a link to that as well. Marco, good morning, man. How are you?
Hello. I've been looking at the statistics of the stream, and we have a bunch of viewers from X, which is pretty cool. So I think like 2,000 people on X or something like that. So if you guys are watching on X, put it in the comment section, because this is a big sort of milestone for the A1 team that we're getting such a spike.
Yeah, we're happy to have you guys. For all the viewers on X, I'm curious to know, genuinely, I'm very curious. Are you guys trading, if you can type into the chat, do you guys trade technicals only, fundamentals only? If you're trading technicals only, go ahead and type 1 into the chat. If you are trading a mix of technicals and fundamentals, go ahead and type 2 into the chat. I just want to get a good gauge as to what the audience looks like and how we can tailor this conversation to better help everyone here. So go ahead and type those into the chat, guys, whenever you have a chance, 1 or 2. Marco, man, how's your weekend going?
Pretty good. So how was your 4th of July? Did you have fun? Did you shoot a lot of fireworks?
I didn't shoot them myself, but I did go somewhere to watch them, and it was a great time, man. It was great. Good food, good fireworks, good music. It was great.
Awesome.
Now I heard you had a celebration of your own, right? I think you went to the seaside and you had some good fish, if Alize told me correctly.
Yeah.
You had a good weekend as well?
Yeah, although I was on the paddle board and my glasses fell in the sea, so now I have these old glasses, and they're like it's a bad kind, so I can see half of the screen and half of it I can't. So I'm gonna be a little bit blind for this week until I get the new ones.
Well, I could say this: the old look is a sophisticated look, and I would say you look like you know your way around the bond market. That's what those glasses are kind of giving me.
Yeah, I would say so as well.
Take that as a compliment.
Yeah, I look like my dad. So basically, like I'm 60 years old. But the new glasses coming soon. So
awesome. Well, it seems like we have a lot of actually fundamental traders in the chat, so we'll continue that conversation here.
Can you see the Twitter or the X comments section?
I only see YouTube, honestly, but I did see one earlier. Let's see. Don't know how to. I'm not gonna mess with the settings here on the back end because I don't want to mess anything up. But yeah, let's see. Maybe I can pull this out. Anyway, let's go ahead and talk about gold. Gold is a really big asset class or asset that is in the spotlight here recently too.
Yep.
Been in a big downtrend ever since the war started, and there's a lot of question as to, is gold going to start turning around to the upside? I know that's a question that I have as well. We are seeing yields kind of flatlining a little bit on the US 10-year yield, which kind of raises the question, is the Fed going to raise interest rates or not? And the answer to that question will obviously influence the directional call on gold. Do you have any personal kind of speculations, any personal opinions on what could happen with gold here, Marco?
I think we're in the no man's land at the moment as far as the chart goes. So we're sitting at a level of support of 4K, and we are below the 200 EMA. So until we can break out from until we can break out of the 4K or the 200 EMA, I'm not going to be looking to take any positions. Fundamentally, though, I am bullish. So fundamentally, I believe that the Fed is going to be more dovish than people expect, which means lower interest rates, which is, of course, bullish for gold. So that's kind of my thinking for the fundamental long term. And if we can break the 200 EMA, and if that can sort of coincide with my fundamentals, and if we get, of course, a bullish print on the edge finder, I think that would be exactly what I need to take a buy position. What about you?
Yeah, so I think I'm going to answer the question here for Ahmed. I know a lot of people here are asking, gold, do you think it's a buy? Do you think it's a sell? I think we can answer this. So let's talk about what the news today is going to imply, right? So we have essentially ISM services, PMI, which if you get a stronger reading than expected, that's obviously going to be good for the US dollar. It's going to be good for the growth story in the US. And if it's good for the dollar, if it makes the dollar stronger, well, then that would, weaken gold, right? And vice versa. If you get a weaker US number growth story, that would obviously benefit gold to the upside. Now, what does the actual reading imply? Well, I think that if you get stronger growth, then it's simple. You have good growth in an inflation environment that we have right now. There's really no need to cut interest rates. If anything, if you need a hike, you're fine. But if you have a story where you have a declining growth in the US, then maybe rates are a little bit too restrictive, right? We've seen that with the NFP report. Now, it's only one NFP report out of 4 really good ones, right? So we have to keep that in mind as well. But you also have to be open-minded and see, is this the start of a new trend? And the new trend being maybe the US fundamentals start to weaken a little bit. So we had the first domino, which is NFP. We'll see if the second domino falls, which is weakening growth. So if ISM services comes in weaker than expected, then perhaps rates are a little bit too restrictive, and maybe that promotes the Fed to be, okay, maybe we just hold rates or start to lower rates, right? It really depends. So that's kind of how I look at it. So of course, this number is very impactful. So it's very binary. It's if the number comes in super strong, that's going to be strong for the dollar, weak for gold. If it comes in super weak, then that's going to be good for gold, bad for the dollar, and perhaps the start of a new trend, which is weakening U.S. fundamentals. So that's kind of how I basically see it. So I know it's kind of sucks, right? I don't have a for sure answer, but the truth is no one knows what the number is going to be. And if they say that, they are absolutely lying to you, or they are selling you something crazy. So I would wait for after the release, and it's in 9 minutes. So be patient, guys. We can be patient here and see what happens next.
It's in 9 minutes?
I think so. Yeah, 9 Central, I think. Let's look at financial juice. Yeah, 9 a.m. my time, which is in 9 minutes. So yeah, we'll be able to cover the reading here too. Now, the reason why ISM services is so important is because when it comes to measuring growth, like the GDP number, the U.S. economy is the overwhelming majority is services. So this is going to be a really good tell as to what the growth looks like in the U.S.
And as far as positioning, so your positioning at the moment, are you still holding most of the stuff from last week, or did you de-risk before Friday? So what's the game plan on that front?
So I have dollar Swiss short, and right now it's going back to my entry point, which at one point it was floating up about $1,400, and now we're up $200. So the decision this morning, or the actual data release, is going to definitely impact that as well. But one thing that I like, Marco, my fingers crossed here, if I can express my personal opinion or what I want to happen, is for obviously the number to go ahead and weaken a little bit. That'll benefit my trade. Dollar Swiss to the short side. But what seems pretty cool here is that when you go to the top settings page, the USD CHF score knocked off 2 points and is now -8 bearish. So you had a moment in time earlier last week and the week before where you had just the dollar being super, super strong, right? Dollar yen, very bullish reading. Dollar CAD, very bullish reading. Euro dollar, pound dollar, Aussie dollar, very bearish reading. And now you're starting to see them kind of go into the neutral territory. And now you're starting to see dollar Swiss getting a bearish reading of -8. So my kind of thought process is that if you get a weaker number today, that only adds more fuel to the fire to my dollar Swiss position. And at that point, I would just keep holding the trade, right? Let it do its thing. In the event that it goes against me, then I will manage this trade manually if I can get out of it sooner than later. And then I will look to kind of repivot into like euro dollar short. I think euro dollar short in a strong dollar environment is a very good no-brainer kind of trade, in my personal opinion. You also have this level of support here. You kind of had a breakout, retest back into this level of support. So this could be a break, retest, continuation to the downside type play for me. So that's kind of what I would look to do.
Yep. Okay. Yeah, for me personally, just a second. So for me personally, my GU is running well, so I'm gonna keep on holding that. But my USD JPY has completely reversed back to very close to the stop loss actually. So we had the initial sell-off last week that didn't hold for very long. So we're kind of grinding back to these crucial key levels, and I'll see what happens there. For now, I'm holding these positions, especially GU. GU I do like the most, but UJ I'm looking to maybe cut after this week. It seems like we won't get a clear intervention, so it seems like the BOJ or the MOF will let it sort of trickle higher. Although I still think the sort of the Fed dovish pivot is a good idea. It's all about the timing. So do you get in too soon? Do you get in just in time, or do you get in too late? That's kind of how I'm seeing it. What's your take on the S&P and the Nasdaq? So we have been in this kind of range bound area for quite a while now. So would you expect a catalyst pretty soon, or would you expect maybe for this range to continue?
I think with the S&P, you're just seeing like a very slow, which I would say slow is good in this environment, a kind of just very slow drift to the upside.
Whoop.
Hello, can you hear me?
I'm sorry. I clicked the wrong button. I wanted to remove my screen, but I removed you. So
no worries. I'm kind of in the camp where, you know, if you get some buyable dips in the S&P, I think it's worth taking to the upside. With the Nasdaq, I would be a little bit more selective, right? Like I wouldn't just buy any buyable dip. I would probably say 26,000 would be pretty good. This level here looks okay as well. But you're starting to see, well, it depends really, because it kind of goes back and forth, but you're starting to see some kind of a rotation out of tech into the broader market. But then money flows back into tech. So it's very sensitive. I would say the better trade would be like the S&P. It's more stable. You can kind of take away some of that tech risk or tech sensitivity risk. So that's kind of how I approach it. On the Edge Finder, I think they're still getting a good reading, if I'm not mistaken. Let's go to indices only. Actually, S&P is neutral. The Nasdaq is getting into bearish territory too. So that changes things as well. I think, you know, usually in this move right here, the kind of trade was like kind of ditch currencies and go into the indexes because it's just a better play. I think now you're gonna have to probably kind of shift away from the indexes and go into currencies because things are starting to happen over there on that side of things. Gold too, right? The metals are starting to get a little bit active as well. The possibility of oil too, right? Like oil at these pre-war levels here, maybe a buy opportunity presents itself. I don't know, but I think it's kind of like, all right, maybe let's shy away from the S&P and the indexes and probably go into like currencies, bonds if you're trading like TLT or something like that, or oil. The metals here, the metals have been very active. I mean, to the short side has been a really good play, right? So that's kind of how I think about it. But if a buyable dip presents itself, then I'll take advantage of it.
Yep. I mean, there's, as you mentioned, a clear rotation out of tech into some other things, which we can notice. And I think the equal weighted SPY is grinding higher while Nasdaq is kind of stagnating or being flat. So yes, stocks overall are still bullish, but things seem to be slowing down, especially in the semiconductor industry and tech in general. Personally, I'm still looking for buy setups. Nikkei is one of the indices that is my favorite. So if I bring it up here, let me try not to remove you again. But okay, Nikkei sitting at a 20 MA. The Edge Finder is, I think, neutral at the moment. So I'm gonna have to wait for a bullish print. But I still like the Nikkei the most as far as talking about sort of general indices. So let's run it through the Edge Finder. Neutral, yeah. And I don't think this view counter is accurate from Twitter because we're now at 3,060 and it's still climbing. So something fishy is going on there. But anyways, other than the dollar and maybe gold moving out of that box. So what's some other thing that you're watching? So let's go back to your screen. Anything else that's kind of interesting on the radar because personally, I'm mostly looking at the US dollar and not really looking at other things at the moment.
Yeah, I mean, if I'm kind of positioned short dollar at the moment in the event that the US fundamentals start to weaken and you get some softness there. I want to participate in that. So I'm
Yep.
playing that via dollar Swiss short. If you continue to see that momentum to the downside, then what I would look to do is continue writing that dollar Swiss short. But then ultimately, if you get some really good levels here, for example, on dollar CAD, where you have the real yield favoring US versus Canada, the money, I mean, obviously, look at this trend, guys. If you guys, everyone's here looking at gold, look at dollar CAD, right? Like this is a trade that you want to participate in. Straight move up, barely any pullbacks, right? Very, very nice trend. I would wait for some buyable dips on dollar CAD. So as the dollar CAD or as the US dollar as a whole is getting softer, I'd be watching this like a hawk. And if you get some kind of price in this level here, like 1.395 or anything like that, then I will look to buy a dip here for the medium to long term, if that makes sense. That's kind of where I'm looking at right now, me personally. So I'm kind of focusing mostly on Forex here, and then also if I can get a really good read as to what's going on with Forex and the dollar particularly, then I can also have a strong read on gold, and then I can start participating in gold, with good decision making.
Would you first wait for a break of 4K and the 200, or would you be even happy to take a position somewhere inside of the box? So
I'm willing
if you
to
get
take,
a good read.
If I'm not getting, so if I don't have the edge finder and I want to just make sure that I'm catching the right side of the trend, I would wait for price to overcome this 200-day moving average, right? This moving average is dangerous for the bulls, right? Like if you have to really overcome it if you want to be to the long side. Now, to all the viewers watching, the question or the statement becomes, well, if I'm buying above the 200-day moving average, well, then I missed all this profit here. Well, that's perfectly fine. That is perfectly fine, right? You don't want to have that mindset of like, oh, I want to catch the absolute bottom, because no one can catch the absolute bottom. That's not realistic. So I would wait for that to happen. And then if we're still seeing strong US dollar, higher yields across the board, and the edge finder score, which is currently bearish on gold, if that continues to be the case, then I would likely continue writing the dollar or the gold short story. I would like to trade ideally somewhere within this red zone and target like 3,800 or 3,400. But with gold right now, you have to be very patient. Like I'm seeing a lot in the chat: gold buy or sell, gold buy or sell. Listen, you can speculate all you want, but if you don't be patient, right, you're gonna get hurt. You're really gonna get hurt. When gold was right here, this is when the war broke out. Everyone said buy gold on the Sunday open because the war broke out and gold is a safe haven. This is the literal candle right here. Like this literal candle is the top. And ever since then, it's been trading in a downward trend. So you have to be very patient. You have to be very patient and follow the fundamentals. And Edgefinder is notoriously scary good at calling gold. It's like its specialty, I would say, is probably like Nasdaq and gold. Honestly, when it comes to Edgefinder, it's super good on gold.
That's what I saw as well.
I would wait for that to kind of, let the score change a little bit, let the trend start to change. And again, like people are going to say, well, if I'm buying above the 200-day moving average, then I miss out on all this, right? Well, you could have had that same mindset here, right? Gold was like, let's look at this chart right here. From here to here, right? You're like, oh no, I didn't buy all the way down here at this level. I'm too late, right? I'm too late. I missed all this. And then you hesitate, or you start shorting, or you start getting crazy. And then you zoom out, and then all this happened. All of this right here. You know what I mean? So like, wait for the trend to shift, wait for the fundamentals to be in line, and write it until the fundamental story no longer makes sense. So that's kind of how I kind of look at gold. Let's see. I think ISM came out, man. I think we missed it. ISM came out at 54 and forecast came at 54.
Okay, right on the dot.
Right on the dot. So what does that mean? It means a whole lot of nothing. It means that the market already priced that in, right? So if you're seeing it on the FX street, if you're seeing it on the Forex factory, the market knows that number and has priced it in. So what happens next is you wait for the next thing. you wait for the Fed meeting minutes on Wednesday, and you wait for CPI next week. And so if you guys are enjoying this segment, if you guys want to understand what's happening with gold, if you want to ride the fundamental trend with gold and not be on the wrong side of the market, then stick around. If you guys are watching on X, YouTube, etc., stick around for this week. We're going to cover Fed meeting minutes on Wednesday. We're going to cover CPI next week. And we're going to definitely help you understand what's going on with gold, what's going on with the dollar, what's going on with the Nasdaq, etc., etc.
Yep. I think the CPI is going to be the next big number. So
For sure.
The meeting minutes, not expecting much because it's something that happened before oil went back to pre-war levels. But the CPI could be the first tell of the inflation falling a bit. So that should be a big one.
Vinish says, why is gold not reacting much? Well, because the number came in line with expectations.
Yep.
So the analysts, right, expected 54, and the number came out at 54. So there's nothing new, right? You always want to assume that the market knows exactly what you know, and the market reacts on new data, something surprising that no one knows. That's when you start to see big reactions. But Marco, I'll go ahead and pivot out here. I'll let you do your portion of the segment. Thank you for the conversation. I look forward to it. And it seems like we're going to have a pretty stacked week. We have the Fed meeting minutes and CPI. And so things are going to start to heat up this summer. So I'm excited.
Absolutely. Thank you for the joint segment, and looking forward to tomorrow.
All right, man. Have a blessed rest of the day, man. Take it easy.
Yep, you too. See you. Goodbye.
Yep.
So let's continue with my solo segment. I do want to mention, if you guys are looking to get funded, so do check out Ola Prime. So where's my text box? Ola Prime, you can get 35% off with the code A1 Live. Okay, so 35% off. The link to Ola Prime is in the description of the stream. Now, Ola Prime has great Trustpilot reviews, so we can go to Ola Prime Trustpilot. Okay, so 4.5, 2.5K reviews. I would say that is decent. If you know anything about prop firms, you would know that this score is pretty high, especially when you compare it to most of the space or the niche. And they don't have a consistency rule. So depending on the account type, they have an option where there's no consistency rule. If you're a swing trader and if you keep your winners big, losses small, the consistency rule can really make or break your strategy. So Ola Prime doesn't have it, and you get a great price as well with the code A1 Live. Do take a look. And now let's continue with the regularly scheduled program. So I am in UJ, and it is not doing what I was expecting. So I was expecting for the red candle to continue, for sort of the fundamentals to continue being bearish for USD/JPY. I'm keeping the stop loss in the same place. I don't want to hold it for too long. So this week, I'll most likely decide what to do with this position. The swaps are getting pretty big, not going to lie. So it is an expensive position to hold. And so far, I haven't seen a lot of chatter from the MOF or the Bank of Japan about a possible intervention. So that is not really a great sign for this position. GU is still holding up quite well. This one I still like. This one I still plan on holding. So fundamentally, I do believe we can go higher. So fundamentally, I think the political situation in the UK is improving, which is bullish for the British pound. The Fed won't hike this year. I don't think there's going to be a reason to hike. So I think inflation is going to naturally come down. Let's just put it on the screen here. So inflation, the CPI. So this was during the war. This was April, 3.3, 3.8, 4.2. So inflation definitely on the rise. There was a clear uptrend in inflation. And then what happened? Well, basically the Middle East conflict was done. Oil, if you look at the price of oil, So oil went back down to pre-war levels. We are now at 72 per barrel, which is pretty low. And I'm expecting the print for July and especially for August to start coming down, because it should start to get reflected in the price, right? Or not in the price, but in the print of inflation. And energy is a huge part of the CPI, right? The Fed is watching the CPI. The Fed is watching a lot of data points, but CPI being the main one. So if this starts naturally coming down, there won't be really a reason for the Fed to hike interest rates. Now, if you go to the Fed Watch tool, I would say the current rate, so the current rate is already pretty restrictive. The current rate is 350 to 375. I would say that is already in restrictive territory. So even if they keep this rate the same, it is still going to be restrictive, and it should lower the inflation on, let's say, a larger sample size, right? So do remember what happened, what we were expecting before the war happened. So before the war, we were expecting 2 rate cuts, and the statistics were pretty much the same as they are now. So oil was at the same level. The CPI should come down to a similar level as well. The growth was at a similar level. So it's kind of the same numbers, but in February, we were expecting 2 rate cuts, and now we're expecting a rate hike, even maybe 2 hikes. So you can see by the end of this year, the market is pricing in 41% chance for 1 rate hike, 27% chance for 2 rate hikes. Okay, so that is interesting. And I think this is wrong. I think this is over-exaggerated. I think this is not needed. So basically, my thesis is bearish for the dollar, and these 2 positions are reflecting that view. Gold, as I mentioned, I know a lot of you love to trade gold. So what I've noticed, and what most of us in A1 noticed, is if you mention gold, your views will massively spike. So there's a lot of traders trading gold. I personally believe it is because we had a massive bull run, which did attract a lot of new traders into the game, let's say. So that is why it's so popular at the moment. But the reality is, it's no longer the best asset to trade. So it's stuck below the 200 and above the 4K level, right? This is no man's land, in my opinion. Especially if you look at the Edge Finder, you type in gold. Okay, you're getting a bearish print right now, but personally, I wouldn't do anything until we can break some of these key levels, right? So I would say there's better things out there. The best one being the US dollar. So doing something with US dollar. The second best would probably be the stock market. You know, the S&P is still in an uptrend. If you want to trade individual US stocks, you absolutely can, because the conditions are fine. You know, it's not a bear market. It's not really a flat market. It still looks okay. Bitcoin and crypto are just horrible in my opinion. I wouldn't touch those at the moment either. Let's see, silver, no. So I would say that the best edge is with the US dollar. And gold, if you want to pair it with the US dollar, you know, if you want to trade it with the US dollar, it will be bullish. So the analysis that I just mentioned for the dollar means gold goes up, because the Fed being more dovish, it means we have lower interest rates than the markets expect, and lower rates are actually bullish for gold. Okay, that's how it goes. But the chart is not there. The chart is not there. The Edge Finder is against me. So my long-term fundamental view for gold is bullish, but the Edge Finder is against me. The chart is still stuck in this zone, so I can't do much. And as a trader, well, you can absolutely sit on your hands and, In some cases, it is the smartest thing to do, but why not expand into some other stuff? So why not look at some other things on the watch list and see what else is out there? And I'm talking to the people that may have come into the space trading purely gold. So I don't know many traders that are profitable in the long term that just trade gold. I know a lot that trade gold and a lot of other stuff, but I don't know a lot of them. I don't know anyone, to be honest, that had great success in the markets on a large sample size and that only traded gold. Okay, so that would be my kind of best advice for any of you new traders. I agree with your opinion on the Fed. Well, I think it's a rational opinion, right? So it's a rational opinion that 2 rate hikes or 1 rate hike this year is just absolutely not needed. So the only reason why they would hike is to establish credibility. So to say like inflation is above target, we're gonna hike right now just to show everyone that yes, we are serious about inflation. But the numbers do not warrant a hike this year. So yes, absolutely it could happen, but I think the chance of it happening is very, very small. I have reached the end of my segment. We have, I think, Tiger coming on after me, so don't go anywhere. You can catch me every single day this week. If you have any questions, you can reach me in the A1 Discord, or of course, you can catch me on the tomorrow's stream. I wish you guys a great day in the markets, and yeah, I'll see you tomorrow. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Monday. Hope you all had a great Independence Day weekend. I told you guys last week to come back with all your digits, all your fingers, and then I burned myself on a sparkler. So there you go. I thought I was lighting a punk for my niece, my little niece, and it started flaring at me and burnt the you-know-what out of me. So, hey, I wouldn't even taken my own advice, but hey, I thought it was a punk. Got a good burn. That's fine because her father got a burn as well, the same one, same finger. So anyway, good stuff. Happy 250 again to the U.S. and on to the week. Okay, on to the week. We got some football coming up tonight, playing Belgium. And then I think the winner of that plays on Friday. So we'll see. It's going to be a tough match, but we'll see how it goes. Anyway, guys, if you would, let me know in the chat. Good morning, Alan. How you doing, brother? Let me know if you guys have any specific tickers you'd like me to look at. Nick, of course, does have his A1 live code for Ola Prime, as mentioned in the commercial before me. 35% off on the account of your choice. You've also got the QR code. If you're digital friendly and you want to scan it, go ahead and do that, and it'll set you up even faster. Again, a lot of cool stuff happening over there. I did a lot of work with them, live streaming back in the day, work on their Discord channel with the rules and the regulations and things of that nature. And we have had a few positive rules changes, like a lot of the firms in the industry, kind of, surrounded things like the consistency score and things of that nature. So it's getting bigger and better every day, guys. These firms are fighting each other, clawing, trying to find a big share of the market. So they have to adjust and they have to make things better for the customer. So that is a positive thing about having so many prop firms out there. Okay. The cream of the crop tends to rise. And so far from what I've seen, and I may be partially biased because I used to work with them, but I don't work with them anymore. But they still have it going on. So definitely give Ola Prime a look. and take advantage of Nick's code if you guys are looking for a firm out there. So anyway, as far as that services PMI, it didn't really do a whole lot. These are the dollar assets over here, guys. Dollar quote currency pairs are at the top. Dollar base currency, bottom left 3 with the Dixie over here on the right on a 5-minute chart. The 9 o'clock candle there is where that report was released. And so far, it really hasn't moved a ton, just a tiny bit down so far, but still relatively in this retail choppy area right here that we're looking at on the 5 minutes. So, so that's it. That's all we get for the day's data. It depends on the calendar you look at too. So like Forex Factory has it missing by 0.2 points. But if you look at some of these other economic calendars I like to follow out here, services PMI, this is Rebate King FX, guys. This is another really good one. It kind of digs into some deeper data sets within the main data, if that makes sense. So for a newer person, a newbie, a beginner, it can get pretty overwhelming when you start seeing PMI data 5 different times. Okay. It just gets confusing at times, but even over here, it's got it listed as a 54. So, met expectations right on the dot. If you look at my FX book, you can see that it did the same thing. It gave us a 54 actual as opposed to the 54 consensus. So it's just a good idea, guys. It's just a good idea to kind of keep that in mind when you're looking at economic calendars, that sometimes the data sets will be different. Here's FX Empire. We've got our own economic calendar over here where I do some other projects, and theirs has it listed as a 54 on the dot as well. So far, Forex Factory seems to be the odd man out over here with a 54 against the 54.2. So anyway, I say all that to say it's still pretty neutral. I mean, if we look at the dollar over here on the Edge Finder, the services sector, again, the last report was bullish. We had exceeded quite highly the previous number at that time, which is 53.7 forecast, 53.6, and then a 53.7 forecast. We had a 54.5. Okay. So that was a very big bullish beat, but we will definitely get a little bit of a color change over here. And this 70% is actually going to probably drop into the 60s somewhere. I don't know exactly where. I'm not a math guru, but it should fall in the 60s, I think. And still, even despite this, it still should remain bullish from just isolating the fundamental data itself, right? So we'll just let the algorithm do its thing. It'll get refreshed and updated at some point over here, and then we can get the actual look. But yeah, as of right now, it's still the same. So, all right. So moving on to the Edge Finder. What's at the top? What's at the bottom? Well, we got a little bit of footsie, playing a little footsie at the top there. FTSE 100, UK 100 with pound yen. They're pretty well tied at a +8 at the moment. Dixie still up there overall. Okay. Dollar futures traders, if you trade futures, you got a good looking dollar right there if we're just isolating it by itself and, separating it from the other currencies. CAD yen up there, Swiss yen, pound Aussie, and then the Dow and the DAX to round out the bullish. The bearish, there's a lot of Swiss pairs over here. The Swiss franc has definitely gotten some strength of late. We'll take a look at the Swissy here in a minute, but you got Aussie Swiss, Euro Swiss, Kiwi Swiss, CAD Swiss, dollar Swiss, all the Swiss. You get a Swiss, you get a Swiss. Okay. Let's go look at the data for the Swissy and see why the heck it's so bullish right now. Well, let's go on over here. 83%. That's why right there. You had one bearish report last week on the manufacturing sector. Okay. But outside of that, you had one neutral and you had 3 bullish numbers coming in. So really good looking services, PMI numbers, retail sales numbers, unemployment rate numbers. 83% is the current look on the Swissy, and that is why it is near the top. Yeah, near the top. I say near because CAD is still the strongest currency for just isolating the fundamentals by itself. So CAD 1, Swissy 2, Yen 3. And then on the bearish side, the Aussie is the main one I personally am interested in. Really that 40% or lower kind of gives me excitement to actively go out and try to short that currency if I can match it up with a strong one. That's the only one. Unless you trade the Turkish lira or the South African rand, which I don't personally. They're further down the list as well, especially the lira. But anyway, it's taking a look at some of these assets. Guys, again, let me know if you have any tickers. Okay, I see gold. Absolutely. How did I know gold was going to get requested? How did I know that? Ladies and gentlemen, gold bounced in to my supply zone confluence. But there's a but. I'm not yet seeing any real excitement. Okay. So that's a clear downtrend on the daily. Okay. And if you guys have been paying attention, Nick's been talking ad nauseum about gold, and there's a reason for it. It's very bearish right now, especially on the technicals, especially on the fundamentals right now. We're getting a -7. Silver is right there with it, -7. Nice little confluence play, just that by itself. But then we get over to the technicals, downtrend, got our daily supply here. Over here on the left, our 4-hour chart. So we got our 4-hour supply inside of the daily supply. And then we have a 1-hour supply inside of the 4-hour supply, inside of the daily supply. Ladies and gents, that's a really nice confluence. But I don't like the volume yet. I just don't like it. Okay. Once we bounced into this zone structure towards the end of the intraday session on Friday, it just look at my bars. It's just not very exciting down here. See these little green bars down here, little blue bars, green bars. If price starts turning around for me, I've got to see a yellow candle. I need to see a lot more volume. I need to see effort matching result. And so far, I'm just not seeing that. So as badly as I want to smash the short button right now, the sell button, even with my burnt index finger, I don't want to do it right now. I don't want to do it because I'm not getting that relationship I personally like to see. Now, could it very well drop all the way to the bottom? Of course it can. Absolutely it can. But if I don't start seeing any volume pickup, it's going to drop without me. Okay, that's just one of my personal rules. Obviously, again, I live and die by bank relationship. If I don't see institutional type volume stepping in by way of the tick volume, okay, the fact that a bank, an institution, has to traditionally place a lot of smaller orders so that they don't spook the market and price gap away and they get an absolutely disgusting, terrible fill. If I'm not seeing all the individual transactions taking place, then I don't know how real that play is right there. Okay. So that's just me. But if it drops, c'est la vie. I've got an easy take profit of a daily or a 4-hour demand down here. So I'm just hoping that the New York, what we have left of the New York-London overlap, which I think isn't really that much time left, about another half hour or so? I would like to see some more volume stepping in. I just don't see it yet. Okay. If we go to a 1 hour, now this candle's gotten a little better, I got to say. And I didn't see that one until I just now went down to the hourly, but still a green candle. I don't know. Let's go take a look. Let's go take a look, shall we, at a little thing called volume footprint. Anybody ever heard of volume footprint? I know this is advanced, but I'm just kind of interested to see what we got down here on the last couple candles. So the delta, so still bullish delta. Okay. Yeah. If we look at this last candle, we had a negative delta. I have to see a bearish negative delta, guys, on this particular indicator. I want to see the stacked imbalances like you see over here to the left. I just want to see it with much bigger numbers than that right there. So I don't know. Do I have anything up top here? I don't really think I do just yet. I don't, this is a little better over here. See all these lines? These numbers are at least 3 times larger than the number up and to the right. The bids and the asks. Okay, this is following tick volume, the tick data. So that's a pretty nice picture right there. I like to see that. And then just going back down to the bottom here, I need to see this number finish bearish, this delta right here. So far, it's 450 or 460 more bullish transactions than bearish, and I don't like that. So if I can get this number to turn bearish, meaning that whole 15-minute candle was bearish, well, maybe that might be a reason, because we did just have a yellow candle over here. So anyway, again, I don't want to get too deep into the volume footprint because it's not very beginner friendly. But just wanted to show you what I'm keeping my eyes on this morning. Okay. Just to see if there's a spot to pull a trigger on it. But at the moment, I don't know. And this one yellow candle, this one yellow VSA candle is probably not enough for me just yet. So we'll see. I'll let you guys know tomorrow if I end up getting into this short or not. I know I'm like, again, I say it all the time. I'm pretty picky on this stuff, guys. I miss a lot of trades, and a lot of them I miss because of that volume relationship. But I just don't like to short or buy potentially false moves. That's just the way I operate. All right, let's take a look at the chat over here. Yo, I'm getting spammed by Bitcoin. I just went over Bitcoin. Yeah, rewind about 10 minutes. Okay, rather than spamming us, just rewind about 10 minutes. You'll find it. Again, I've got no move on Bitcoin. We finally broke through the remnants of that weekly, daily demand. If we go, I'll just go back to it again for you real quick here. Okay, we broke through the remnants of this daily and weekly demand. This was the daily. This was the weekly. Broke through it. Now we're still within the monthly. And the thing that I'm watching, okay, just to answer your question again, there's a daily demand further down at the bottom end of this monthly demand. So I'm personally now interested to see if we get a bounce off of it. Now, this is just a technical look because so far I don't have any fundamental reason to trade this market, nor do I have a sentiment confirmation. So it's neutral. That's why I said earlier it's neutral. So that's my next curiosity point, if you will, is to see, and I'll leave this here, but it's to see what happens if and when we drop to that level. Because again, when we go to the highest time frame that we have, we are still in this monthly demand. Okay? That daily demand is further down. So there's nothing. I've got nothing. I've got a downtrend, daily downtrend. It's starting to slow down, obviously, because we have hit these confluence points, but it's still giving us lower lows and lower highs. So like I've mentioned a few times over the last couple of weeks, I just need to see this relationship right here start to form. A series of higher highs and higher lows. If I'm to ever have any interest in clawing back some of this gigantic 50% drop we've seen since October. Okay. Now it's dropped 50%, but we've seen 70 and 80% drops in Bitcoin before. So is it done dropping? I have no idea. Would it surprise me if it dropped another 10, 20%? No. No, we've seen this movie before, guys. Have a look at Bitcoin. Let's go to a monthly chart. Look at this. Back in 2017, this doesn't look like much. Swing high, swing low, that's 83% drop. Even right here, okay, 2020, that was a 72% drop. What about up here? 55% drop. What about this one? This is going to be even uglier. 77.5% drop. And even these pullbacks that you see right here in this monthly area are still pretty big, 33%. Look at this one. Going to be ugly as well. 38, I think. 31 and a half, or 32%, we'll call it. And then right now, since October, again, we are in this 54.3% drop, currently at 51%. So, yeah, that's why I have no play on it. I mean, if you're looking at gigantic time frame form of resistance, that's clearly what this is over here. It's going right through our monthly demand. So I don't know. I don't know if that's going to, help it out, help influence it to start curling back to the upside. But I say all that to say, I need to start seeing a new series of higher highs and higher lows for me to have any interest really in trying to buy this thing. If you're a trader, if you're just in it for a few days, a couple weeks, okay, it's downtrend, but kind of evening out. If you're a long-term position trader, playing with your portfolio, adding to it, well, it's already given you a 50% discount. So I don't know. I'm obviously not financial advice, but I'd be starting to get interested if I were a position trader. I just personally ain't. I'm more of the 2 to 5 day trade, trader type, short-term swing trade. But anyway, yeah, that's enough on Bitcoin. No play. If I start getting any change on the data, the Edge Finder starts giving us a little bit better of a look, well, then maybe so. But if we just go isolate the data sets over here, okay, Bitcoin is -2. So you got a tiny bit of bearishness on the trend, the sentiment, and straight up 0 on the data. Way better stuff to trade, guys, in my opinion. Let's see here. So, yeah, back to gold. So, again, I'm just going to watch this. We're starting to get a little bit more obviously activity happening in the early part of the U.S. session here. We start to get on a 15-minute chart and see we are starting to get a little more activity, okay, taking place, but it's just kind of crunched up in the side. So I don't know. This could possibly present, for the way I trade, possibly a little bit of a breakout to the downside, and which is also in context with the daily supply zone. So entering the supply, daily supply, and now we're trying to exit it. So just need to see more data, guys. Here, probably within the next hour or so, I'll have a better view of that. I just don't have a great view of it right now. And then silver, by the way, has a daily zone of its own, a little bit higher up. So that might even present a little bit of an opportunity there. Again, if we start to see the volume picking up, and I'm just not seeing it yet. Silver is the same as gold. That first 8 o'clock candle for me, okay, which basically incorporates the New York-London overlap, or the beginning in New York, starting to pick up a little bit. But yeah, I do like this. I do kind of like this 4-hour daily zone structure a little higher. Move that up just a little bit higher. That way it touches that. And that's probably the play I would look at for silver. Take your pick, heads or tails, because again, they're both -7 right now. Anyway, as far as dollar, let's see, I didn't touch on dollar Swiss yet. I want to touch on that because it did just hit my zone. So I want to go back over here to dollar Swiss and see what I got. Let's see, 915. All right, so we have a little bit of a trend problem. Dollar Swiss is giving us a bearish bias. But what's our daily over here on the right telling us? Is this screaming bearish over here? Yes, the Swiss franc is the second strongest currency. Yes, the US dollar is going down likely to the 60% area, while Swiss is at 85, that like we just saw a minute ago. But it's kind of hard to fight against the dollar right now when it's just going up and up and up, especially with the trend on all these dollar pairs, dollar Swiss. Now, I looked at dollar Swiss a little different just to see what this pullback was. So clearly on a daily, you can see my 8 EMA is well above the 21 EMA. So that's the alligator's mouth pointing up. We did get a little bit of a hook to the downside, but it's still overall up. If I drop it to a 4-hour, if I'm trying to get aggressive on this thing, well, the moving averages did move around, but again, what's the lip doing? Closing up, isn't it? It's hard to short. It's hard to short when the alligator's closing its mouth. Okay? I need the alligator's mouth open like you see over here when price returns to a zone. Over here, it's not. It's closing. So is that the possibility of a trend reversal on this smaller time frame or a trend resumption on this daily? Could possibly be. So even though we've bounced into this zone and it just screamed at me a little bit ago because of this 30-minute, I think, zone. Okay, 30-minute zone. That's where we're at right now. Got a confluence on some smaller time frames. It's smaller time frames. It's more noise, talking about the 30-minute and the 15-minute. And that's part of the reason that I'm skipping this for now. And not to mention the trend I just showed you guys on the daily. The only reason I really wanted to pay attention to this zone is because look at all the volume over here. Look at this big, lovely red VSA candle on this leg out with a gap. That's pretty nice. It's pretty nice. I got to admit, the effort matched the result. Now, if I had this red candle on the gold that we just looked at, well, I'd be smashing it. I'd be smashing the short button, but I just don't have it. So, the markets don't allow us to mix and match. We got to take the markets as they are. And right now, I just don't have a play. So let me save that. Take one more look at you guys over here. The sell down will happen tonight and tomorrow morning, says Max. Yeah. Hopefully we get some more volume. If we do, I'm in. I'm in like Flynn, ladies and gents. I love this channel. I have learned so much. My only complaint is it seems like Nick spends half the videos lately discussing, explaining to the haters comments versus trading info. Yeah. I mean, at the end of the day, you can't let people walk all over you. So sometimes you just got to call them out. right? We're not here to we're not here to tell you what you want to hear. We're here to tell you what you ought to hear or should hear, right? Because you're not, if you go to any other channel out there, they're going to show you easy money. They're going to show you trades all day, every day. They're going to do it on a lot of smaller time frames where it gets noisy. Okay, where you're fighting literally the retail traders. You're not following the smart money. The smart money makes all the money. You guys would agree with that, right? So when it comes to the kind of the trading styles that most of us have on this channel, it's a lot of slower, we're lucky to get a handful of opportunities a week. So it's not like we're scalping or short-term intraday trading to where we have to be on the charts 100% of the time, because we kind of look at things a little different. Okay. We look at the data. The data is what tells us what to do. It's not a chart. So in that aspect, it gives us a little more time to, get off and talk about other subjects. But no, at the end of the day, we're trying to tie it into a lesson for you guys. Okay. We're just trying our best over here. And it sounds like the bulk of you understand it. So anyway, all right, I got 5 minutes left. I don't see any other tickers from you guys. So I'm just going to go take a look at the UK. Let's go have a look at one or two of these bullish bearish vibes real quick. UK made some money off of that a week and a half ago. Would like to possibly get back in this thing. I do have a daily demand here. So if I just go to my daily, you guys can see my daily candle here. Big acceleration gap to the upside, like that. Like that we got some former resistance points kind of coming through this area here, a little bit higher than the zone. I really like that. And then if we drill down into some smaller time frames, not the 4 hour, but I do believe it was it really kind of starts at the 2 hour point. I do have a 2 hour demand, but I think I drew it up specifically on the 1 hour. All right, 1 hour down candle followed by a whole bunch of green candles to the upside. That is demand exceeding supply. It's also given me my gap, which I like to see. Okay, showing me that the zone has some kind of strength in there. Again, these are not what we trade. We don't trade these silly gaps. There's no liquidity within them. The liquidity that bumps the markets, that moves the markets, is typically on the other side of them, guys. Again, that's why I trade the zones themselves, the demand zone. Okay, leg out volume gave me a nice yellow candle. Okay, again, this is what I'm lacking on gold right now. This is what I have on the dollar Swiss short, but on the dollar Swiss short, I don't have the technicals in my favor, the trend, right? So on the UK, though, if I go back to my daily, I do believe, daily on the right. So we still got our 8 EMA above my 21 EMA. You can see the alligator's mouth opening to the upside. It's not trying to curl back. That's a very good picture for me. We've obviously also broken all the structures, broke this structure up here, and we actually tapped into that daily supply overhead. What about my 4 hour? Let me go look at my 4 hour over here. Is there a 4 hour zone within that daily zone that we've already mitigated? And if so, where is it located? Okay, well, there's a couple zones here. There's one right here at the base. That's the one we just bounced into right there. So 4 hour supply. And if we go a little higher up, there's one here, but the leg out candle had no volume. Green candle all the way at the bottom. Okay. Effort did not match result, and it rebased again. And that's where the effort started matching the result on this leg out. The yellow candles at the very bottom. Yellow, yellow, yellow. Okay. So yes, by definition, that is a zone. It's not a zone I'm going to draw up though. What about over here? This is a little bit better of a picture. I will draw this up because of how much volume came out of it and the fact it is closest to the swing high. Remember, banks like to tackle that liquidity typically as close to these swing lows and swing highs as possible. They want to sell high, just like we do. They want to buy low, just like we do. And especially if you're a bank dealing with millions and billions of dollars in orders, accumulation, distribution, all the money, what do you think? Do you think they want to? Now they still very well could take this zone. But if they had a choice between this zone and this zone to short, I guarantee you they'd probably be eyeballing that one. It may not seem like much of a difference, but again, when you're dealing with millions and billions of dollars, guys, that's a lot of money right there. So sometimes the lower zones get taken out and bounce. Sometimes they wait for the true origin of the overall strong move. And so far, if I can get that, if I can pull that forward, so far, we have bounced into the bottom daily 4-hour confluence. So that might make this a little more risky since we did bounce into these two sets of eyeballs, guys. And that just means if and when we do return to this 1-hour zone down here, I would still likely take the trade. I just wouldn't put on a full risk. Okay, I'll cut off a little risk, partly because we've already hit the zones ahead, the supply zones. So that's going to be probably one of my favorite plays going through at least the early part of this week. And then just to finish off, it looks like, okay, Aussie. Yeah, like I said, we got all the Swissies on here, Aussie, Euro, Swiss. Let's take a look at just one or two of those real quick. We'll get up out of here for the day. Aussie, Swiss, where are you at? Right here. And daily on the right, as always. Okay, lip starting to, all right, so we've bounced into the demand and we're starting to curl back up. So this is a no-go, especially with all this nonsense here. Euro Swiss, I'll finish on this one, guys, since that was one of the other bearish assets. Yeah, trend is just not my friend right now. Okay, it's just not looking so good. Let's break this structure if we're trying to find a place to short this white line right here, this major structure. Break this structure and close, and then possibly we would have something to possibly short on. So just need more work on it. All right, ladies and gents, I'm going to watch gold for the rest of the day. I'm going to watch dollar Swiss. And see if the FTSE can somehow come back to a cheaper spot. Might buy me some FTSE again. See if I can't run it back on the UK 100. Ladies and gents, that's all we've got for the moment. Take care of yourselves out there. Address those wounds you probably accumulated lighting firecrackers, fireworks, and we'll be back tomorrow and run it back. So take care. Talk to you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.